Let's exactly discuss that point with Vetri Subramaniam, the Group President and Head of Equity at UTI AMC. Vetri, hi, good morning. Just debating whether the Welspun Group can do it when it comes to NBFC or not. But I'm not going to ask you about that. I'm going to just take your view on NBFCs as such. It's the hot favorite in the market right now, turning out to be a bit of a crowded trade. Do you think it's now time to go back to the drawing board and take a call whether or not you should be booking out on any of the NBFC's name? Because, you know, these stocks have rallied and they've rallied pretty hard. Is it time to do that, or would you say as an investor you would continue to ride the tide when it comes to NBFCs because they're in fashion? Vetri, is my voice reaching you?
Yeah, I can hear you.
Yeah, I just wanted your take on NBFCs as an investor. How does one look at the space right now, given the kind of returns one has already made with any and every NBFC?
Sure. Yeah, so Aisha, I think that's a pretty generic question, and honestly, it's a little hard to take a generic call within that in terms of whether the NBFC story is overdone or undercooked or whatever that might be. And I think there are different kinds of NBFCs involved in very different businesses, right from at one end of the spectrum the low margin housing finance business to the other end of the spectrum where somebody doing UCVs or other kind of used vehicles has a very high margin kind of business. So there's a whole range of businesses out there as far as NBFCs are concerned. But I would just point back to what I think Nikunj sort of said at the beginning, and if I were to dot that back to my own career when I started in 1992, in fact in 1992 it was the done thing for most business groups to actually set up a NBFC, and then many of them proceeded to fade out over the next 5 to 10 years, and very few actually survived it and made it through all the way to today. And not so long ago, about 4 or 5 years ago, in fact the thought process within the RBI was one that the NBFCs were leading to a large amount of regulatory arbitrage, and they were actually trying to close the entire route down. And in fact the regulations for NBFCs over a period of time have moved closer and closer towards what the regulations are for banks. But I think there is certainly some amount of excitement in that area with perhaps the fact that some other financial institutions are not in a position to lend as aggressively or make use of opportunities in the marketplace because they're grappling with their own internal balance sheet concerns and issues. And so capital is getting allocated into some of these NBFCs who are making use of this opportunity to create new business niches for themselves. But you have to be a bit worried when the market starts responding ecstatically just to the news of somebody entering a new business segment. I think Nikunj made the point earlier. This is true of IT in the late 90s, infrastructure in 2006, 7, 8. So that's something that I would take with a pinch of salt. But should you therefore use that as a broad brush argument to stay away from NBFCs? Maybe, maybe not. I think that's something that you would have to look at a stock specific basis, based on where you think valuations are, the quality of the management, and the kind of execution and growth you're getting.
So you're saying stick with the leaders, stick with the performers, they've already done well. Yeah, it's the new entrants, and the reason why they're entering the space is what one needs to perhaps relook.
Asha, my limited point with NBFC space is that...
Yeah, Aisha, again, just to reiterate, you can't do a, so to speak, Khwabi pulao of saying that he's entering this, so let me start valuing the opportunity on day one. I think that is dangerous territory.
Absolutely, which is why we have people like you to give a concise view to our viewers. Yeah, Nikunj, you were saying something.
No, I'll want to point out the retail space, and again I want Vetri to comment on the retail space. Globally, what is the trend? Toys RUS, I mean the toy RUS has gone bankrupt.
Yeah.
Abercrombie stock is down 90%, Gap is struggling, there are other retailers which have filed for bankruptcy.
Michael Kors has bought Jimmy Choo,
well, that's a transaction. I mean, Jimmy Choo was like, my views on, luxury brands, but never ask lady a wrong question on Jimmy Choo and bags, so we'll keep that point aside. Vetri, my question to you is that globally retail or brick and mortar retail stocks are getting smoked. But in India, it's a different story. Avenue Supermart has a market cap of 60,000 crore. Trent is at 300. Future group of companies have made a comeback. So globally, if there is a tide which is towards e-commerce and against brick and mortar, in India, I can see there are different signs or different patterns.
Yeah, I think the only thing to keep in mind over there is that we're not, the comparison is not a completely fair comparison. In the US, I think, you saw the peak in terms of maybe formalization of organized retail maybe a decade or more ago, and then thanks to the rise and continued rise of online and particularly Amazon in very specifically, you're now seeing a decimation of the market cap that got created in organized retail over, many decades, going back maybe 6 or 7 decades. I think when you look at the Indian context, keep in mind that the total value of the organized retail segment is still a fraction of the total value of retailing which happens in that company in the country, and therefore there is scope, one could arguably make the case that the share of organized retail in this economy will continue to grow, and the share of e-commerce as well will continue to grow. So it's not a very fair happening in the US and make a mirror image of that over here. But I think, since you did touch on Jimmy Choo and the risk of going into more controversial territory, I think, as far as the standardized retailing of mass goods is concerned, the economic arguments in favor of e-commerce are very strong, and therefore unless you're talking about retailing where it is really able to make a difference to the consumer's life, or it's able to touch on those elements of branded, touch and feel, luxury goods where somebody wants the experience of going into a shop and buying, certainly there will be challenges. But I think the comparison is misplaced because, the of the total organized retail market in India, if you look at the market cap of that related to the size of the total retail opportunity, we're a tiny fraction. So I don't think that's a fully fair comparison.
Vetri, a few days back we did some data analysis on how the flows have really come in, or at least in terms of performance, it's really the mid caps that have outperformed large caps over the course of the last 5 years, and that's where the money has really found its way. Is it time for large caps to now catch up? Are you seeing that in your funds as well?
Well, you never know which way the market will decide to play catch up. It could be either way, either with the large caps starting to do significantly better, or the mid caps taking a pause and pulling back to where the large caps are. But I think the two relevant things to keep in mind is that yes, the outperformance of mid caps over large caps has been very significant, going back almost to, I think, the last 4 years, pretty much maybe to August of 2013 when we were going through a little bit of a mini crisis. There's been massive outperformance of mid caps. Not only has there been massive outperformance of mid caps, but equally what has happened is that the valuations in the mid cap space have actually moved to a significant premium to the large caps. Now this is quite highly unusual, honestly, looking back at the past. It's not in line with historical trends that we've seen, and typically the premiums in the past at least have tended not to sustain. There are many arguments that have been made for this, that mid caps are a lot more locally focused, large caps are a lot more global focused. But honestly, when we start drilling down into the numbers and you start looking at individual companies, what we find is that many of the mid-cap companies, so to speak, even if you look at companies which are in the mid-cap index, actually many of them do have a significant sort of export profile. They've got global operations. So I think it's slightly misplaced to make the comparison between large caps and mid-caps to say that large caps are global, mid-caps are local. You need to be, again, a lot more stock specific when making those judgments. But I think certainly to the extent that they are at a premium, it does create a little bit of risk, and therefore if I were an investor making allocations and just looking at where valuations are, I would have to believe that the better opportunity today lies in large caps as compared to mid caps.
Vetri, you may just want to hear this data out. What we've done is that we've looked at a classic compounder, and a classic compounder in my book is Maruti. At ETNA, we always celebrate the Rise with India moment, and this is how Maruti volumes have gone up. Maruti volumes in last 10 years, we are looking at last 10 years. I'm not getting into once upon a time when Maruti went public in 80s, but in last 10 years, Maruti's volumes on a large base, they've grown by about 2.3x. That's the kind of growth a company like Maruti has delivered. I also want to picture the profitability and the stock price performance of Maruti. So we are still with the volume growth, but let's look at the stock price performance and the profitability of Maruti. And by the way, by the time it will come, there you go, it's coming now. That is how net sales have moved for Maruti from 14,500 crore to 70,000 crore. That is what Maruti has managed to clock in terms of net sales. And then the PAT performance also for Maruti in last 4 years is up by nearly 4x. So Vetri, how does one figure out that what could be the next compounding story, theme, industry or sector? 10 years ago, if I would have talked about Maruti profits becoming 4x in 10 years ago, it would have looked unreal. But the size of the opportunity and the consumer boom is so strong that now everybody is still now telling me that, this the best for Maruti is yet to come.
Yeah, so I think the simple thing over here is really to look at it in terms of the runway that the companies or the opportunities that are there in a particular business line for growth. And the way to do that is, you could really sort of juxtapose where India stands in terms of growth compared to where, let's say, even other emerging markets like China were 5 years or 10 years ago, or for that market where, let's say economies like South Korea or Indonesia were 10 years ago, and then look at how industries have grown as the economies have grown in size and as per capita incomes have increased. So I think the fact of the matter, and I don't come at this purely from a consumption point of view, but really it's a question of saying that if an economy continues to employ more and more people and their incomes start to go up, then what are they going to do with those incomes? They're going to change their consumption basket. They're going to aspire to buy a lot of new products that they couldn't previously afford, and the penetration levels therefore of consumption of those products starts to rise dramatically. So this is really the story of a classic emerging market where as the economy grows, people's incomes rise, and and obviously job creation is a significant element of that, and then they will spend money on certain things, be it demand higher quality transportation, their own personal transportation, better healthcare, they will spend it on education. So I think the trick really here is to say which are those areas which have a long runway, where perhaps consumption has been limited to a few, it's very low penetration levels, but just as you've seen in other economies, as income levels increase, the penetration level of those products starts to rise dramatically because incomes go up, and that's pretty much the thought process that would help you identify some of these stocks over long periods of time.
So Vetri, where could a performer like Maruti come in from? Which sector? Don't name the stock, but where do you think the next big money could be made, say in the next 5 to 10 years? What sector are we going to see emerge as a winner?
So actually, I think that's the wrong question, because honestly, as incomes go up and people's aspirations change and the nature of consumption changes, you will see many companies, Aisha, who will benefit from this trend. It will not be limited to only a particular sector or otherwise. It could be in areas like travel, it could be in areas like healthcare, it could be in areas like education, or it could very well be even in products like automobiles, where the fact of the matter is that if you look at the car ownership per thousand of population in India compared to what it is even in other emerging markets, it's a very low number. So honestly, I think these kind of stories will emerge across the board. It's not a question of being sector specific. The trick over here is really more about getting the stock selection right, because eventually it is the case that there are one or two companies which execute far better than the others, and they end up becoming disproportionate winners. So even as we talk about Maruti, and while I won't make a specific stock recommendation, keep in mind that Maruti has had a very different outcome compared to the development of the four-wheeler passenger car market in India. How many of the four-wheeler car manufacturers are actually profitable in India? The answer is hardly anybody. In fact, I suspect Maruti accounts for more than 100% of the car profits that are being made by all automobile companies put together. So it's not as simple as just betting on the sector. It's also a question of, do you back the right company, and is that company able to execute? Does it have the brand? Does it have the wherewithal to scale up over long periods of time? So it's very attractive to just give a soundbite and say, you know, it'll happen in auto, it'll happen in consumption, it'll happen in education, but it's never that simple, because it's really those one or two companies, combination of brands, right place, right time, managements that create the magic, and the others don't.
Retail investors trust you, Vetri, and your insights on identifying those companies, and you know, they trust you with their money. So hopefully you'll be able to pick on those names soon enough in the next bull market, or the bull market we are currently in, and perhaps in the next wave to go from here. But thanks very much for joining us.
Thanks, Aisha.